Hey guys, this is the long-awaited update on Marathon Digital Holdings and Riot Blockchain. After I did my first video on these two assets, I got quite an enthusiastic response. And as promised, I'm going to keep my eye on this. The past few weeks, months have been relentless to the downside, and it's not just in the blockchain space. We've seen the same thing in cryptos, in the stock market. Bonds crashed. Heck, even oil started pulling back last week. So it's been quite a bit of bearish sentiment. But things do look worse when we're near a bottom. So we have a couple of alternate views on what we're expecting in the blockchain space. But I do want to note that I do have links to these two cryptos, to these two assets in the link below, description below. So check out links there for both of these tickers. Of course, Marathon Digital Holdings is MARA, M-A-R-A, and Riot is R-I-O-T. And we're going to be looking at the stock market as well as Bitcoin, just to give us an idea of where we are big picture. So this is an up close view on Marathon, and you can see that we've been pulling back steadily since about April or so. We were looking for further downside in March and April for the crypto segment, and we got it, although we've stretched quite a bit lower than we've expected. The same thing goes in Riot, in which we had a bit more of a consolidation. Looked like we hit a bottom, but then we continued tearing downwards. So we're definitely stretched, and it could have implications on the big picture chart. As I mentioned, however, these are not the only assets that have pulled back. We're going to shift over to Bitcoin and maybe check out some of the other cryptos. This is the Bitcoin chart. I had a downside setup. I never could have dreamed we were going to break 20,000. I think I had 24,400 as my projected bottom. There's a lot of confluence there, but we did break down. We went down as low as 17.5, something like that, and we may not be done yet. So prepare for potentially more downside, although it does look like we may have 4 waves up, maybe 3 up, and a 4th in Ethereum. Ethereum 2 pulled back far lower than I thought was possible. We had our support set at about 1195, both on the small picture and on the big picture chart. So again, we are stretched like I couldn't believe. And finally, this is the S&P 500 futures that trades around the clock, so the ES. And we had a bit of a double bottom. We had a bottom on June 16th as well as on June 17th. So far, the official bottom is about 36.39, add about 10 to that for the SPX equivalent bottom. And I'm not completely convinced we're done yet, because this looks like a corrective upswing, corrective rally. It looks like an ABC up, ABC down, and possibly a bigger C wave that'll get us in this box. So we may open up and then go all the way down. Not totally sure yet. However, the market could prove to be more bullish than I'm expecting. So right now, my primary expectation is a bit lower before we're done. Why are we looking at the stock market? Well, remember, Marathon and Riot are equities at the end of the day, so they track both Bitcoin and the stock market. And over the past several years, we've had cryptos and stocks more or less correlate. So this is our big picture chart on Marathon. We're going to be looking at both of these tickers, both of these charts as we go. And I've adjusted some of the Fibonacci's, everything, but overall, our pattern is still there. We've had a much deeper than expected 4th wave. So I was mentioning how we were just peaking below the standard retrace level, which would have been 1134 for Marathon, but we have broken down below even the next lower fib at 767. However, this is not the only place where we're seeing that. We've seen the exact same thing happen in the stock market too, in which the Dow or the S&P 500, whichever one you look at, they've also broken well below standard expectations. We actually hit this pink box down here. This is kind of an auxiliary lower low that I had on the chart, and we hit it. Are we done yet? I think we're close, not totally sure. This would basically make the entire pattern likely an ending diagonal. So that's topic for another time. We're seeing similar action in the S&P 500 as well. So shifting back to Marathon, we're still looking at this as a 3-wave top, 3rd wave top, A wave down, B wave up, and a C wave finish. However, the alternate pattern is looking more and more likely here in that this would be the basically a truncated 5th wave. So once again, a 1, 2, 3, 4, and a 5. You could count this as an ending diagonal 5th wave, although I don't like the proportions of this thing because, well, it breaks one of the key rules in Elliott Wave theory, in which the 3rd wave should not be the shortest. I'm not totally sure if it is or not, but for that reason, I still keep purple as my primary pattern here. So I'm not convinced this is actually a 2nd wave dip, even though we've gone quite deep. This is so far more than a 38.2% retrace, but still within the standard Elliott Wave 4th wave limits, basically. So although we broke the ideal pattern, we still have this set up. And our overhead targets remain the same. Although, well, when you go this deep, one could say that we project a little lower than before. At the same time, you sometimes have what we call stretching the rubber band. You push the beach ball into the water, which cause a furious reversal in the other direction. We still have MACD divergences in place. So this is, again, marathon. When we look at Riot, it looks even deeper, even nastier. This is actually how a lot of more speculative tech stocks look. I got ARK on here. That's one ticker, IBB. There's a couple other ones that look absolutely demolished. It looks like we've given back all our gains since 2020. Some of those, not so with Riot. We're still well above where we were in 2020 during our March 2020 everything bottom. But here too, I'm interpreting this the same way. Best interpreted as 3 waves up and a very deep 4th wave. Although here too, we have this alternate pattern that has this as a second wave. If this is a second wave, that could mean we're following more of a diagonal pattern up, but we have a lot to prove before I'm convinced that that's what we're following. However, our overhead targets remain exactly as they were before. The box remains where it is. And again, our standard 5th wave target would be the 1.764 extension, bottom of this purple box. So 108 would be the target for this one. So going back to marathon, I don't think I mentioned what the bottom target would be, about 143. How far up could that possibly be? Well, from where we are now to the minimum target, about 143 or so, could be a 23x return. So again, don't put the cart before the horse. We got to see a lot more upside action before we can play that with any confidence. When I look at this from where we are on Riot to the bottom of that, it's about the same, about a 24x return, something like that, potentially. Now, we've obviously talked about these 2 crypto miners. We've looked at the stock market. We looked at the Dow. How about Bitcoin? Well, as I mentioned, we've had a much deeper than expected 4th wave, very deep, non-standard, although we haven't quite overlapped our 1st wave top yet. So I know I have a lot of clutter, so I'm going to zoom in a little bit. Our 1st wave top sits at about 12,330. We've dipped as low as 17,745. So technically, by textbook Elliott Wave theory, we have not invalidated an impulsive setup. So again, this still could be a 1, 2, 3, and a very deep 4th wave flat with the 5th wave conclusion coming. The alternate interpretation could be that this was actually the 1, 2 over here, and then this is the 3rd. That would be more of an ending diagonal kind of interpretation. If that is the case, then this would overlap the top that we had way back in June 2019. Doesn't have to, but we would expect it to. So 13,961 would be that 1st wave top. If we overlap that, then that would probably put me in that camp looking at this entire thing as an ending diagonal 5th wave. So that would be the 3rd wave top back in 2017, end of 2017, and 1, 2, 3, 4 with one final 5th wave to go. So you'll notice that my continuing theme is that I still expect another high to come because we've had an impulsive structure so far. I know a lot of people are in disbelief. I've seen comments, a lot of desperation, a lot of pessimism, which is a good sign of being quite oversold at the moment. I've got people that are worried that their 401ks are going to go to zero. If you picked individual stocks and the company went bankrupt, then yes, it could happen. But if you're diversified with mutual funds or you have multiple holdings, that is much less of a concern. So assuming that this is actually a 4th wave bottom, our overhead targets still remain where they are, although the timing may change. So that's where I'm going to look at MARA, marathon, for a little bit of a clue. I believe I left my old time estimate here for October of 2023, mid-October. Because we've gone so deep, that actually changes our channel trend lines a little bit. So I've readjusted. These purple dashed lines give us another rough estimate of where we may see a top. Now, again, timing is secondary in Elliott Wave theory. It's all about prices. It's all about Fibonacci retraces and extensions. Timing is not what we do, although sometimes you can get a decent estimate of where we'd expect our timing to take us. So with that being said, we have our trend lines intersecting the bottom of this box in about probably middle of 2024, which I actually think is quite pessimistic. I really do think we're going to have a final top sooner than that. There's also the ability to use Fibonacci time sequences, extensions that can sometimes give you more of an idea of where our ending could be. If I can only find the tool, here we go. So if we put our bottom in March of 2020, and then we take our 3rd wave top as being here, and our 4th wave bottom being right here where we are right now, you often see a top at the 0.61 extension. That actually puts us in February of 2023. So we have some alignment that we're going to see a top for everything sometime in 2023. My gut feel is going to be close to the middle of 2023, but the market does what it wants. And again, when you're this oversold, you often see a furious rebound in the other direction. So that could be an indication of, well, some ferocious rally. Now, what do we expect in a rally that may be coming? Well, I expect an ending, some kind of a 5-wave structure. So probably an impulse. And our first wave may get to the top that we hit back in March of 2025, March 25th. That was our consolidation on this leg of the downside. We may have a shorter rally, not totally sure yet, but we haven't had any upside structure to make a clear projection yet. Regardless, I still expect something like this. So once we have 5 up and 3 down, we'll have a 1-2 setup. Then we can more confidently deploy our cash. If you guys have been buying, all the power to you. I wouldn't go too crazy buying just yet because, again, we're not out of the woods yet. We're not seeing the kind of bullish reversal I'd like to see to give us more confidence. And if you're playing leverage, especially, it can be very dangerous. Wait for our 5-wave setup and a 3-wave pullback down, because the 3rd wave is the fastest and steepest part of any kind of rally structure. The same will apply to Riot, which has just as much to prove, if not more, just because the shape that we've had in the depth of this correction. But that could make for an even more furious rally. So I'll have plenty more updates coming our way. Again, I am eyeing this for options plays, leverage, things like that. So I'll be doing much more frequent video updates on this as we get some more momentum to the upside. But remember, eyes on the prize. Careful, don't put everything in all at once, but I would also advise against panic selling. And don't forget to diversify. So make sure you have your portfolio covering lots of different sectors. Don't go all in with blockchain, because we're going to see quite a rebound in pretty much every asset class if we really are anywhere near the bottom of this 4th wave across different asset classes. So if you enjoyed my video, don't forget to give me a like and subscribe so that you don't miss any updates on either these assets or various other equities or cryptos. Till next time, thank you for watching and happy trading.